know what? I am amazing. And before we go very far and introduce our guests, welcome to the Rachel and Miller Podcast, Season 2, Episode 5, where we discuss real estate, real life, and occasionally things that we probably shouldn't. We're pros in buying and selling of residential real estate, but nothing you hear is legal, financial, or professional advice outside of our licensed wheelhouses. We're just two humans talking. Proceed accordingly. Today, we are fortunate enough to have two guests with us. And it's just before we went live, I was sharing with Dennis that Chad, Rachel, and myself, 25 years ago, that I'll never say out loud again, we're in the wireless industry, and now it's gone full circle. So we have Dennis. Hey, Dennis, pronounce your last name because I made up a last name for you.
It's Heeman, but if you're in Germany, it's Heumann. I've never heard it said right, except for when I fly through Munich and I'm catching my connecting flight. If they say my name, then it's Heumann. Other than that, I just go with Heeman.
I went with human.
I like that too.
and and we also have Chad Basilone. Both of you guys are with Movement Mortgage, and in this day and age, mortgages are top of mind for everybody. And Rachel and I have talked a lot about mortgages because that's not our wheelhouse. And we see a lot of agents who try to talk mortgages, and I'm like, no, back away. I There's too many ins and outs. And I don't want to be the guy that says, "Oh yeah, you can do that, no problem," and not have that available. Do you guys see that with agents trying to talk about mortgages when they probably shouldn't be?
I see it both ways. There's been trends. This is my 38th year of lending. I used to tell loan officers coming into the world, if they're younger than I am, the number of years in the business, sorry, can't hire you. But now, because it's almost 40 years, I would exclude so many people from hiring. I can't say that anymore. But I have been over the years seen realtors try and become loan officers and vice versa. Loan officers trying to become realtors. And what I've learned in 38 years is stay in your lane. This whole process works so much better when you have experts in each lane versus good or okay in both lanes. I think the consumer deserves to have an expert in both lanes. So I try and discourage it on both fronts as best I can.
I
Dennis, we just learned how long you've been in the mortgage biz. Chad, how long have you been in the mortgage space?
My 20 years.
Oh, Chad, we can't hear you.
Yeah.
I can hear a little bit of talking, but that's about it. And
Testing,
he,
testing.
Yeah.
Gonna have to adjust that microphone out in the wilderness.
So, Dennis, did you say 39 years?
38 years,
30,
yes. And
38
I think
years.
this year's going to be so challenging. I'm hoping to make 39. Hopefully nothing happens in this year. I've been saying that, I think, for 3 years, though.
What did you do prior to?
I know nothing other than mortgages. So I
Okay,
got
fair
out of
enough.
school. I had a finance degree.
Uh-huh.
I looked at the paper and I knew I could either sell insurance, I could work at a bank, there was like this bevy of jobs for a finance degree graduate, right? And so I answered an ad to a finance company, which was what was before subprime or alternate mortgages. There was finance companies. Subprime mortgages didn't even exist at that time. And so we did the folks who had a little bit credit challenged backgrounds at the finance companies, and then they would, clean up their credit, mature, and end up at the bank. And so that's how long I've been doing it. There wasn't even subprime mortgage companies or alternative mortgages or any of whatever they call it today.
Am I coming in louder now?
Oh,
yes,
there you are,
yay.
Yeah.
Chad.
So
Yay.
I'm somewhat of a smaller guy, right? But I got these big mean paws, right? So I think I had one of my paws on the computer and it was right over the microphone.
Oh, okay. Very
Whoops.
good. So,
So
Chad, how long have you been in the mortgage game?
so I'm going on my 21st year, and as Scott mentioned, I'd like to not say that out loud too much. I keep my young perplexion here, based on my yoga and all my outdoor activities. But I look like I'm 28, but it's 21 years in the business. Yeah, and
So we can call you Chad the yoga guy.
yeah, when I'm on the phone talking to clients, they go, "Gosh, you sound like you're 29. How could you be in the business for 21 years? You must have got in when you were 6 or 7." I go, no, a lot of yoga, a lot of yoga.
Wait,
So-
so Chad, will you go with me to do goat yoga in Death Valley?
He's
100%.
been trying to get me to do
Yes.
that.
100%. If you want to leave in the morning, make sure I got things all tied up and ready to go, and then we'll do some goat yoga, and then I'll get back on my mountain here and get back to work.
Well, it's goat yoga in Death Valley.
Sure,
Whoa.
sure.
Like a mix of Bikram and goats, I guess. Wow.
Yeah, it's definitely Bikram. Yeah.
Yeah,
That's
it
funny.
they have goat yoga in Death Valley. Yeah, it's kind of fun. Rachel keeps saying no, but I'm just gonna come down and kidnap her, and she won't have a choice.
Yeah.
Chad, you and I had a great meeting last week. I think we were together for like over 2 hours,
Yeah.
and our conversation went in a million directions. But one of the things that I really thought was interesting that I thought would be great to share today is talking about some of your favorite products. And I'd love to know, and Dennis, please as well, we'd love to hear from you too. As it stands today, what are maybe the top 3 products that are working well for buyers in this market? And it doesn't have to be 3. If you've got your top 1 or you want to talk about 2 of them, go for it.
Yeah, I'll go ahead and start. So what's nice is we have a very large array of products, right? We have products to fit the investor. We have products to fit someone that maybe have a low down payment. And we also have products to fit a scenario where someone's looking to sell their property and buy another property. And we can do what we call, that'll be my first program here. It's called Buy Now, Sell Later, okay? And what that allows the buyer to do is not have to use that current departing residence as a liability, and they can put an offer on another house and not qualify for both houses, so you don't have those contingencies, you don't have the red tape, and it's a nice clean transaction. So that's called Buy Now, Sell Later. And basically just a quick rundown on that is they need about 15% down minimum on the purchasing property, and they have to sign an intent that says within 60 days they're going to list their property. But the beauty of this is we don't now have to have that contingency on selling this property and then buying another property, so you can put a clean offer in. So that's an amazing, unique product that we have that's really taking a lot of traction right now in this market.
I have a question, and it's probably a typical one that you get in relation to this. What happens if you cannot sell the house that you moved out of to purchase the house you just moved into?
Well, you have to sign a letter of intent. So you have to intend to sell the house within 60 days. Dennis, you may be able to touch up on that a little bit on that question.
Yeah, there is an out strategy for that. If let's just say you listed it for a period of time, probably not the market that we're in today, right? But markets of years past. And then let's say you couldn't sell that property. We would then refinance that using the collateral that they currently have and bridge that loan until they could either sell that property or move into another property. So it's a little bit more of a tricky, more of a tricky solution for sure. But we've got 3 different investors that do this sort of product. And then we have about 10, I think it's 9 total investors that do different kinds of bridge loans, which are very similar in kind of like their intent, be able to buy a new house before you've sold your old house, just a little bit different on the underwriting guideline side.
I could see how this would be appealing for investors. They probably have a lot of transactions going on at one time. They have deeper pockets. When I look at this as a seller's agent, my biggest thing, and probably Scott, I bet you this is what's going through Scott's mind too, is if I have a seller who's looking to use this type of product, I want to make sure that their house that they are intending to sell within 60 days is priced to sell. Because that's one of the things as agents we're running into in this market right now, is that a lot of sellers are still looking at a much more inflated price than what the market is, than the trends in the market. So, and I know, Scott, you deal with this a lot, where you have sellers and they're just really focused on what they think they should get versus what the market will give them. Miller?
That 100% correct. I have that all the time up here, and it was funny because I was just in the board office this morning talking about that. Is having properties that our prices up here in Ridgecrest are a lot lower than they are down there in the Los Angeles market, or Dennis, especially down there in the coastal area down there in Manhattan Beach, Redondo Beach. Our top of the mark up here is in the mid threes, not 3 million either.
Yep.
Our average price range is about 240 to 260, and people are like, "Oh, I have the best house on the planet. I need to get 300." Probably not. Oh, in order to make things like that happen, we really have to have the houses priced right. And I think that the program you guys are talking about, is there a dollar amount that is like a $300,000 price mark, or is there a price that is like the sweet spot for that type of bridge loan type of program?
I don't think so, but there's different investors for those sweet spots, right? So I said, on the bridge side, we have multiple investors as well as on the buy now, sell later side. But those investors typically are oriented towards more of a jumbo format or more of $100,000 to $500,000, and you can kind of see it within their guidelines. But it's also somewhat spelled out in their min and max loan amounts. So there are some lenders that have a program, maybe two like that. But what happens then is you can only lend typically to a segment, and that's why we've brought so many investors on. We have 63 investors that we use total. Even though we're an independent mortgage bank, we have the most amount of investors in the industry. It's more like a brokerage almost with that many investors. But what I have found, and I drive this a lot myself, is that when you have a bevy of like investors like that, they segment themselves out and where they want to do their lending. And so when we bring in new investors, we make sure that's a little divergent from the investors that we already have. So to answer your question, it's in segments kind of, but it's covered.
When you talk about investors, Dennis, is it pardon the expression, but is it like Tom Smith who has a lot of money, or is it a conglomerate of investor like the Smith Industry type of thing, where they have a group of investors that do it?
Yeah, it's usually, so we have internal products with mortgage banks. They will typically have correspondent products that they underwrite, they fund, they do everything. They use the term in-house, right? They will have those products and control those in-house and deliver them to market. But then there are some products that usually mortgage companies won't want to have in-house because of different risk tolerances, and those products they will broker out to an investor, and usually an investor is made up of typically a group of investors that will form a company and do non-QM lending, non-qualified mortgage lending. So it sits outside of some rules. There are some rules that everybody has to play from, but from an underwriting standpoint, the parameters are larger. From a collateral standpoint, it's a wider box as well, so that when people have a little bit more of a challenging situation, either from a credit or a collateral standpoint, that they have an outlet for that. And it's really tough to maintain that many investors, and that's why most mortgage banks won't try and have that many outlets. Internally, we have about 25 different banks that we use, again, they're correspondents, so we underwrite here in-house, but we underwrite to their guidelines, right? But when you broker out, those products are purely up to that investor and what their tolerance for risk is and what their niche in the market is. And our goal, when I set out our goals years ago, was to be all things to all people. Because when I grew up in the system, I kept hearing everywhere I went to work, well, we can't be everything to everybody. And that always drove me crazy as a loan officer, because as a realtor, you have to be everything to everybody that you can be, right? And if you're going to be my partner, I've got to figure out how to make a loan to anybody who can have a loan made to them. So that's been kind of my mission since I've been at my last two companies.
Go ahead, Rachel.
Yeah, I have one more question regarding this particular product. And Chad, the way he presented it, it makes me feel like it's putting in an offer with fewer contingencies, at least no loan contingency, or excuse me, no selling the current home contingency. Pardon me. Is that, other than making your offer really strong, would you say that's the biggest benefit of the buy now, sell later? Chad, can't hear you. I want to know what you're saying.
Yeah, can you hear me?
There. Yeah, a little bit. That's better.
Yeah. Okay. So what
Okay.
it is
Get
is
close.
basically, yeah, what it is it basically it gives you another outlet. It gives you more options, right? So typically in the market, a person has to qualify for either both properties or have that contingency. It just gives you another tool, another option to have outside of the standard scenarios. But to piggyback a little bit on what you were saying, as far as what clientele it's for, we have investor products where if an investor is purchasing a property, we can do a scenario like you and I talked about, where the buyer will qualify based on what the rental income is going to be. So if we
Right.
have an investor in this situation, the investor is saying, okay, I want to buy X property, and X property has, based on what the rental market and what's going on, let's say the property has a $3,000 rental income that's projected. As long as that mortgage payment is somewhere at or below, a little bit of leeway with that, lower than what that rental payment's going to be, we don't need income documents, we don't need W-2s, we don't need tax returns. So that's a super sweet product for the investor. So this particular product we're talking about, I would say it's more of a tool to have in your tool belt if a buyer can't qualify, or you need to maybe make some wiggle room with the contingencies. But as far as an investor goes, that product that I'm talking about now is so beautiful, so less red tape, and just so easy to qualify for, as long as, again, they put the down payment and that mortgage payment comes below what the rental income will be on it. And it's a very, very simple and easy product. Aggressive rates, it's amazing.
So are we segueing into the second product that you like?
Yes.
Or, okay.
Yes. Yes. Yes.
Okay.
Because you were mentioning about investors, and this may be a good product for an investor. I feel like what we're talking about now, we're segueing to that second product.
Yes,
That's
perfect.
more for the investor. A lot of your investors want quick process. They want less red tape. A lot of your investors are self-employed borrowers. They're writing a lot of things off. The qualifying might be tough. So this product, which I'm talking about, which they just need the rental income to qualify. They don't need to show any personal income, any tax returns, anything like that. And it's an amazing product for an investor.
Yes. Does that product have a name?
We call it DSCR.
Yeah,
Which is
debt
debt
service,
servicing.
coverage ratio.
Ratio.
Okay. Debt service CR. Oh, okay. Very good. Yeah, when you spoke to me about that last
I try not to
week,
use all the crazy acronyms in this business.
but we do use them, but then we spell out what they are, because actually we did have one of our episodes was all about the acronyms.
Yeah. Okay. All right.
Because they are aplenty for sure. Yeah, no, that's a very cool product that you shared with me last week, and I have not had another loan officer or a mortgage company ever explain that type of product to me before. So I love that you were able to talk to me about that. That was very cool.
It's a great product.
Miller?
Hey, Dennis, what do you think are the top three things to keep a mortgage, or I'm going to say what are the top three things to keep a mortgage from going sideways when you're getting ready to close?
So from which perspective? Our perspective, from
Let me
the
rephrase that.
agent.
If you were to give somebody a piece of advice to keep what you know is the top three things from going sideways, what are your top three things to advise a client not to do to keep things from going sideways? Does that make sense?
No.
Yeah. Yeah, I got sense out of that the second time around. Rachel's being mean. Oh no.
Yeah.
Get the boxing gloves out here. Yeah, I think I can kind of run with that because, I see the fallout from when you don't do that due diligence, right? I think the biggest one is with most investors, they do a quick little credit check before you go to pull loan documents. So sometimes a loan takes 2 weeks, 3 weeks, 4 weeks if it's a complicated loan. Sometimes it can take a couple months depending on like how complicated the scenario is or whatever contingencies along with it. And they want to make sure when they approve that loan, the debts that they saw are now the debts that are really there at the time that they're actually going to sign the documents. So one piece of advice to buyers is don't incur any debt. Don't sign up for anything. And being a co-signer is incurring debt. Some investors will allow you to sidestep that, but you're going to have to explain what happened. And so I always say, if you're a consumer and you have your son or daughter says, Dad, Mom, I need you to co-sign for, call us first. Let us hear what's going on with your scenario so you don't blow up your loan right at the finish line. So that's one thing I think as a consumer that's probably pretty important. Another thing is communication has to be going both ways. Like in the scenarios that I've seen, and I've been blessed. I think I've had almost 15,000 loan officers in 38 years. So I've ran some very large companies. So I've seen some. Every time I think I've seen it all, though, I get something new. Had a new one yesterday. So
Wow.
I get something new all the time. But I can tell you that communication piece is critical because a lot of times right near the end of the process, something will come up. And there's all kinds of safety checks, the government post Dodd-Frank. There's a lot of looks and compliance and rules and things that we look at now that we didn't look at before the mortgage meltdown. And it's a little bit of a more complex process designed by that, by the nature of what happened, right? And so the ability to go to a consumer and to who's buying the home or, even, somebody who's selling and have them readily available when we need something and to be, I would say patient through the process of those needs is critical. So the quicker that communication happens, the faster back and forth, then you can make all of your contingency dates happen on a transaction. I think that's another thing that's, hypercritical for success in this as far as the do and the don't stuff.
That's one of the things I do with my clients is I include my mortgage lender on every email is so that he or she sees everything and they're not surprised. And if they see something funky, they can say, stop, hold the phone. What are we doing? I've had one mortgage lender say, can you not copy me on everything? I said, not a problem. In my head, I'm like, and this will be the last loan we do. Is to me, you can't over communicate when it comes to someone buying a house. There are, like you just mentioned a moment ago, there are so many different rules and different regulations and inroads and outroads that it can get funky really quick. So I copy any of my mortgage lenders on every communication so they can see what's happening, and along with my TC. And I use SkySlope, and everything I send, everybody also goes into my SkySlope. So there's everybody sees everything. Yep. It's clean, clear. So that to me is huge, is clear and clean communication.
So
yeah, I think it's one of the most important parts.
We've got don't incur any more debt and communicate. Those are your top two pieces of advice for somebody who is applying for a home loan.
I think the main thing that people need to realize is we're all on the same team, right? So we're trying to get the loan closed, right? We're all on the same team. Our underwriters are on the same team. Our processors, we're all on the same team trying to make the things work, but we have to conform to guidelines. So like Dennis was saying, the more we know about the situation, we'll then figure it out and figure out a way to get creative, figure out how it's going to work. And if it's going to work, great. If not, it's not. There's no hiding things in this business anymore. So again, yeah, like Dennis said, the communication is key. and let the quarterback, let the team handle the situation.
So heading into the last 5 minutes we have together, Chad, you shared in great detail what makes Movement Mortgage different from other mortgage broker companies, other companies. I'd love for you and Dennis to share what that is. And I'm touching upon how you spoke about human underwriters. You spoke about instead of just having a pre-approval, you're coming into offers with approval, so it leaves less chance for loans falling out during escrow. Can you talk about that?
I think the biggest misconception in this business is a buyer will think they're approved, right? A lender will say you're approved, right? But there's a big misconception. There's pre-approved and there's actually approved, okay? So we have an automated system called DU, decision underwriting, right? And we all have the same we all have the same system, but we have different logins, right? The information is only as good as that loan officer plugs it in, right? So then they'll go to the buyer and say, hey, you're approved. But they may say you're pre-approved, and the buyer might think I'm approved. But once the underwriter checks the work and goes, wait a second, you didn't calculate this properly, your deal's dead. So what's unique about Movement Mortgage, what we'll do is, I haven't seen another company doing this, but we actually have a physical underwriter that will take the whole loan file from start to finish on a purchase, go through the W-2s, the tax returns, the pay stub, go through the whole scenario after I pre-approve it. And then we have an underwriter that will actually physically go through everything, put their stamp on approval, say, your loan is actually approved by a human who's already saw this loan before you even put an offer in. And that's super strong because now you're competing against other buyers, and you can go to that listing agent and that seller and say, hey, listen, we have a fully approved loan from an underwriter, not an automated approval. That's huge. And like I mentioned that example earlier, one of the sellers actually took our offer that was at 1.23 million versus another offer that was at 1.3 million because they felt more confident that our loan was going to go through. They felt more confident about the way that we structured it. They felt very confident about how I presented myself and the company, and they basically took $70,000 less to go with our offer because of that. So it's huge. It's huge.
Very good. Dennis, anything to add to that?
Oh yeah. If you could give me 20 minutes, I would go on, but I know we have this.
We'll have you back on if you would like.
Of course.
This is Dennis's wheelhouse.
I would say is, as of last year, because I just did some math on this last year, 36% of our clients started with another lender and finished their process with us.
Wow.
So this is a very challenging market to underwrite in. It's the people who are buying in this market usually are a little different from a credit perspective than somebody who would buy in a 3 or 4 or 5% market, right? And so we're finding that the challenges are big, and we've got, like I said, over 60 investors. If a loan can be made, we can make it. It's, to me, it's like a giant Rubik's Cube, and we have the biggest, probably the best Rubik's Cube figuring out process in the industry. And then the last thing that I think that makes us really cool is we have a very, very competitive price, but what we do when we make a loan is, I think, more important. We give away 49% of our bottom line that we make as a corporation. We give back in the form of building schools for underserved communities, for charter schools in underprivileged communities. The next closest to us is Wells Fargo. They give back half of 1%. That's the next closest financial institution. We give back 49, and only because if you give back 50, you're a nonprofit. And so there's a whole different game when you're a nonprofit. But we find ways to give back more than the 49. This company was built to serve, which I think is really neat. If you were to meet the owner, if he was on here right now, you would just say, wow, it's amazing. Somebody's like this who owns a company. You're not sailing around on a yacht flaunting all your money. No, he drives a 15-year-old pickup to work every day and lives in a very modest house. He's already built 10 charter schools, and he's going to build 100 in the next 10 years. And all the lives that we influence with our company is really what makes us different than everybody else. And we can make loans that others can't. That's the short way to say it.
That's really an amazing legacy, and I'm glad that you were able to bring that up, because Chad did speak to me a lot about that last week, and I really enjoyed hearing about that part of the company. So that's amazing and fun information. And as you know, as consumers of a product, you know, people may or may not care about that. But at the end of the day, thank you. That means our time is up. At the end of the day, that is very important. And I think what Chad said is it's when they learn of it, they feel very solid with the fact that they have chosen to work with Movement Mortgage.
Love it.
Did you hear the whispers?
Subscribe.
I thought those were in my head.
They could
Maybe
be.
they were.
People do care about rate, what their payment is, what your deal is, all that. But once that comes together and they see what they're doing, that what their loan is doing, and we service the majority of our loans as well. So like I was mentioning to you, Rachel, they can see on their statement what they're actually providing by paying their mortgage bill. And it's special. And no other company is doing this. It's just special because it really hits home. It makes you feel real good about what you do every morning when you tie your shoe and I love what I do because I love helping people, but this just takes it to a whole nother level.
I love that.
And that's one reason why I got in the business was to help people, but be able to make a good living. Being a teacher, being a coach, can't really vacation much, right? So this is a way to, work hard, make money, help the community. I mean, it's a beautiful thing.
You said it best. You said it way better than I did, Chad. We have to wrap this up though, but maybe we should have you on again maybe next month. You can have more information you'd like to share. Miller?
With that, Dennis, how would people reach you? Or how do people reach you? And Chad, how do people reach you? What's the best way to reach out and say hi?
Well, for myself, I'm at chad.basalone, BASALONE at movement.com. Phone number is 805-558-3515. Dennis is like our Bill Belichick. Dennis is the leader. Dennis is the coach. Dennis is the one that gets the products every morning. Dennis is the one that keeps abreast of everything. I'm sort of the Tom Brady, the quarterback that kind of, does to the ins and outs and make sure the playbook's right and make sure we win.
Let's stop now.
Hey.
Stop.
Wow,
There,
that's
stop
a very enthusiastic crowd.
That was a long one.
Wow, big crowd.
Well,
So,
it's our hundreds of people.
what I'm gathering from that, Chad, is that Dennis is not going to give a shout out on how people get a hold of him.
Oh no, I'm so simple. It's Dennis with two N's .HUEMAN at movement.com. You can always find any of us at our first name our last name at movement.com. We keep it pretty simple.
Great.
Rachel, same question to you now.
Oh, no, you can't get a hold of me.
No.
RachelMoreno.gratishomes.com is my website. My phone number is 805-813-0664. And you can email me at rachel@gratishomes.com. And Miller, how do people get a hold of you?
Any way they can. No, I'm kidding. Homeswithscottkmiller.com or a phone call 760-264-3501 or even Scott at homeswithscottkmiller.com. Guys, this has been an awesome podcast. I appreciate it. If you'll hang out with us for a second after I end us, we'll go into the green room and have drinks in the green room. So with that, everybody, thanks for joining us today. And next week we do have a person coming on from Washington who is the referral queen when it comes to real estate. In the last year, she's done over 200 referrals. 200. That's a lot of referrals.
Can't wait.
Anastasia will be joining us next week. Same bat time, same bat channel. So remember, everybody, do good, have fun. And if you're not, you're doing it wrong. I'm Scott with Epic Realty, and this has been Real Estate with Rachel and Miller, joined by Dennis and Chad from Movement Mortgage. So with that, we will say goodnight, and we will talk soon. Take care, everybody.